Welcome to Turning Hard Times into Good Times. I'm your host, Jay Taylor, speaking to you from the borough of Queens in New York City. It is the 31st day of May, 2023. I've titled today's show, Michael Oliver Loves Silver, and Avino Silver Has Plenty of It. David Wolfin, the president and CEO of Avino, will join me in the second segment of today's show to share Avino's progress in Mexico, where they're building, well, really on their way to becoming a mid-tier silver producer in Mexico. I think it's a very exciting story. The stock is selling at under $1 or around $1 US. Trades on the New York Stock Exchange. It's one I think you really should keep your eyes on, and David will be with me in the second segment. But right now, I'm happy to tell you that Michael Oliver, the editor of Momentum and Structural Analysis, is with me once again. Thanks for joining me, Michael.
Hi, Jay. Good to be back.
It is always good to have you, one of our more popular guests. And I must say, it's always good to tell people that it's olivermsa.com, olivermsa.com to subscribe to Michael's letter. And I really think you need to consider doing that. And maybe some of the things we talk about today will help you reach that conclusion as well. Well, Michael, I wanted to focus on silver today for sure, but the title of your last 360 weekend letter, two major tectonic plates, U.S. stock markets and the monetary metals. You seem to be thinking that something big is going on there. When you talk tectonic plate movements, are you suggesting, what are those two tectonic plates?
Well, I've been in the financial markets since I was basically a kid, didn't know anything. 1975 when gold was legalized. And so I sort of learned from the ground up. I was with E.F. Hutton then. And I've never seen, I'm speaking as a technician and also on a broad fundamental basis, I've never seen such gigantic asset categories that are moving in such a way that they will impact either negatively or positively another asset category. And you can't just look at gold and silver and say, well, I'm going to analyze it. No, you can't. You're making a great mistake. Mm-hmm. You need to watch the stock market in particular, and we keep restating why. And it's not on the tip of everybody's tongue, and I don't know why.
Yeah.
In 2021, the markets had risen sevenfold in the S&P from the 2009 low. NASDAQ 100 rose 16-fold. There is no bull market in U.S. paper asset history that is comparable to that. The great disasters of the 29 to 1932 downside, the dot-com collapse, you name any bull market peak and the collapse that followed, none of the bull markets had sevenfold or 16-fold increases before they collapsed. They had doubles, triples maybe. Why did it do that? Well, I mean, you can debate all you want to about all the great things that were invented or whatever, but look at an M2 chart and you'll see it went off the page. The money went somewhere. Investors chose to put it into the stock market. And when they first put it in 2009, that made sense. The stock market was in the 600s on the S&P. It had down from a 1570 high. Okay, it was cheap, so it made sense. Take that river flow of capital that the central bank gave you and direct it into the stock market. Sure. They kept doing it for a dozen years. Okay, not only the stock market, but muni bonds, high yield corporate debt, real estate, etc. All those asset categories went up basically parabolic for a long period of time. It was a bubble. The bubble is now broken from our vantage point in early 2022, over a year ago. A few months after the peak in the S&P and the NASDAQ, we put out massive sell signals arguing, it's over, we're going into a major bear market. The first phase will be an arm wrestling match. And sure enough, it's been that. In other words, where you can't decide whether it's up or down. In fact, it's down, of course, we're well off the highs, despite the rally. The problem is that to unwind a bubble of that size means there'll be real world consequences, in your face consequences that doesn't affect just people in the 1%, but everybody, painfully. A lot of people made decisions over a long-term period of time about their personal financial outlays, corporate outlays, city-state spending, federal government spending, all based on certain assumptions, including money is cheap.
Right.
And it stayed cheap, and it stayed cheap. So it became habitual. So a lot of mistakes were made, and they're embedded in the economy. And once the bubble breaks, it's like ripping off scabs.
Mm-hmm.
Okay. You reveal what's underneath, and it's only begun. Okay. Now, what does that have to do with gold and silver? Why is it that of all the asset categories on the planet, that stocks, the S&P was down over 20%, NASDAQ down over 30% from 2021 close to the 2022 close. T-bonds down over 30%, muni bonds down enormously, real estate down enormously. What was up? What was steady?
Mm-hmm.
Gold was unchanged for the year, 2021 close to 2022 close. That was in the mid 1820s, by the way, was the price. Yeah, it had been either side of that level, but that's where it was. Silver actually gained 1% or 2%.
Mm-hmm.
Yes, it was a volatile market with a downward sort of bias, but actually at the end of 2022, it closed higher than it did in 2021. What's going on here? Why was somebody, S after that, parentheses S, somebody's buying gold and silver and selling everything else? What was on their mind? After all, the Fed said they're going to beat inflation, right?
Right.
Well, what are the monetary metals? They're inflation metrics, right? So if they're going to beat inflation, then why wouldn't gold and silver collapsing? Because they knew, somebody knew, we argue, the bubble's broken, and as it unfolds in shards and makes noise, the central banks will have to, out of necessity, do what they were invented to do, and that is print money, print money, print money, get money cheap, and support government debt market. It's absolute, that's their raison d'etre, okay? They have to do that. I don't care what they say now. And already Powell said in his last little speech, that was properly interpreted, I think, by analysts, we can pause, I think, because the banks themselves, he said, are actually tightening credit. Mm-hmm. So they're sort of doing our job. So in effect, he said, the Fed's going to back off here because the banks are doing, and I think he was also scared by the banking event, which I do not think he anticipated at all. Okay. So we have a bubble that's only begun to burst. I think Powell is beginning to maybe realize that. Mm-hmm. And when the blood gets thicker, the policy will shift more overtly. And a lot of people think, oh boy, that means the stock market will go up. Well, go back in history and look at Fed fund rate increases and decreases and overlay them on the S&P, and you'll see, mm-hmm. When the bear market starts in the stock market after a period of rising rates and starts to crumble, even when the Fed starts to cut rates, it will not stop that bear market. Mm-hmm. They started cutting rates in late 2007, around the time the S&P was peaking. They continued to cut rates and the S&P collapsed. It didn't matter. Why? Because the bubble was breaking. Right. This time we have a bigger bubble in history. So the consequences will be major, and therefore it's gold and silver people need to be watching the stock market.
Well, gold and silver certainly responded well after the 2008 collapse. For 3-4 years or so, it beat the equity markets. And this, if I'm hearing you right, you're seeing this as being bigger by far than what we had in 2008, 2009. And when you think about it, it was over 10 years or so when they held interest rates at extremely low levels, near zero or at zero. Essentially, I guess this is what the Austrians understand as malinvestment. You know, how can you have capitalism? I make this argument. How can you have capitalism if you're not allowed to determine what the price of capital is, Michael? And so you have massive amounts of malinvestment, money flowing to areas that are illegitimately flowing to areas that don't make economic sense, right? And then the wrong people are getting rich, they're getting powerful, and they're getting rich, and they don't want it to end. And those people are very influential, so they continue to put pressure on the powers that be to keep the game going, I suppose. But at some point, as you point out, you know, you've been so helpful to me in this regard, Michael, that at some point, Mother Nature prevails. It doesn't matter how much the communist or the fascist or whatever take over. Eventually, Mother Nature prevails, right?
Absolutely. There's a reality out there, in other
Right.
words. And you can tease reality for so long, and then pretty soon, when it snaps, get out of the way if you're on the wrong side.
Right.
So right now, our focus at MSA, and we look at all four major asset categories: the debt market, foreign exchange, stock markets, and commodities, with a focus on gold and silver. But you just can't look at any one of those in isolation. You're making a mistake, because there's a lot of information in the side mirrors. Don't just look out the windshield of gold and silver. So right now, our prime focus is not so much on gold and silver, because gold and silver, as far as we're concerned, have made their statement.
Mm-hmm.
Not only did they go down and wash everybody out by having a false price chart breakout last September, when gold blew through a price chart floor that an idiot could draw. 1675, 1675, 1675 for a period between late 2020, 2021, and early 2022. Repeatedly used that level as a floor. It broke it. People ran screaming from the room. Silver also broke below prior lows, went down to the low 17s. It's all over. Gold's going to 1400, going to 12. It depends on what they were only debating, how deep. Nobody was debating whether. We argued then at the time it was occurring, this is a bear trap.
Mm-hmm.
And sure enough, it spun its wheels down there for about 4, 5, 6 weeks. And then boom. And by March, you're back to the highs. Okay. And nobody's cheering that. Everybody's still focused on things like NVIDIA.
Yeah.
Like, as if, artificial intelligence as a concept is something new. It's not. It's been around for years. It's only now become popular.
Mm-hmm.
That's a bubble market in our view. It's a mini bubble within tech. And it's not an overall tech bubble, because overall tech is not doing what NVIDIA or even Microsoft is doing. So people are focused on these few narrow leaders, and they're not focused on the broad financial sector, which in our opinion is technically ripe to do just about what banks did in March. I'm not talking about banks now. We're talking about things in the financial sector that are non-banks. Retail is basically laying just above the 2022 lows, just like financials.
Yeah.
Healthcare sector, second biggest sector in the S&P, has been the steadiest sector out there, therefore has attracted a lot of money because it's safer. Mm-hmm. It looks like a pending disaster based upon our technical work, and it's very close to our trigger numbers. These events can't be happening and the market go up. Mm-hmm. These are too big of areas of focus in the stock market. So NVIDIA is a teaser off to the side.
Yeah.
Meanwhile, these big sectors are they're literally loitering. It'd be as if the S&P right now were trading about 3,800, a couple hundred above its 2022 low, and laboring.
Yeah,
that's what these sectors are doing. When they go, market goes. When the market goes, the data points go. The Fed starts to panic.
Well, Michael, I saw a chart yesterday. I can't remember exactly where it was, but Twitter somewhere. They were showing that I guess the little guys, the retail people, are getting into the markets in a major way, and they're the NVIDIA's these kind of AI stocks are really starting to suck in a lot of people. From your experience in history, isn't it true that towards the tops of markets, you got the retail people always get sucked in last, and those people that are buying, you said somebody out there has been buying gold and silver when other things aren't doing very well. There's not necessarily the small guys that are doing that. I think the big hedge funds perhaps are. But anyway, my question is, have you seen this movie before? Essentially, you and I have been around for decades, and it seems to me this is always a classic end of a bull market, is when there's a mania of little people getting into the market. They've missed the boat all the way up, and now they're saying, oh goodness, well, I guess we're on to the next bull market now. Let's get in now. This time we're not going to miss it. The fear of missing out.
Mm-hmm. And the parabolic nature of the move that NVIDIA just had, by the way, it's had a big advance prior to this.
Yeah.
Don't discount. It didn't just start from zero. It had a massive move, a big drop, and now it's zoomed past that high. We did a report the other day arguing that be careful with these things.
Yeah.
When you see markets make a quote new high, doesn't necessarily mean it's good. And we showed some sample charts of markets that we'd called over the last few years that had done exactly what NVIDIA did.
Mm-hmm.
And when they hiccuped after having done that, they didn't just pull back, they collapsed.
Right.
Now, I'm not going to argue NVIDIA is going to collapse. I suspect it will because of the psychological nature underpinning it. But yes, it is a distraction. And yes, people are flooding into it. And I think that if it comes undone, they won't know where to get out.
Mm-hmm.
That's their problem. There's no clear technical level that says, oops, I better put my stop there. You can't tell when you look at the price chart where to get out.
Right.
And if it starts down, all you're living on is hope.
Yeah.
Anyway,
Well,
it's something to watch because it'll help break the psychology. But I think these bigger sectors are far more important because nobody's watching them.
Yeah. Well, and you have the index funds that are heavily loaded into those big top 8 or 12 stocks or whatever that basically run the market. And so when people buy their mutual funds or their index funds, they're buying into these big things, and I mean, it seems nobody's really paying attention, as you say. They're not watching them, and at some point in time, they've got to take a tumble, you would think. That said, though, Michael, you and I remember 2000, the dot-com bubble. There were some survivors there, and they are the powerhouses of today. So I suspect that at some point, when this market finally pays its dues, there will be some great buys. And so how do we make sure that we have some wealth left over to buy up stocks if and when that day comes again? If we avoid World War III or something, and and somehow, we're still kicking and there's still opportunities. We would like to have some cash and some wealth left. But, we've seen the devastation that occurs when these markets collapse in 2000 and 2008.
Mm-hmm.
Retail people get hurt the worst, it seems.
Well, yeah. So the issue is preserving your capital or increasing it. And again, we argue that the monetary metals, and we don't call them precious metals because that would link them with platinum and palladium and so forth. Silver and gold are a place to be. Don't treat it day to day, week to week. Don't panic when silver drops $2. Okay, gold pulls back 100, takes it a month to do it. Meanwhile, it went from 1613 to 2080 in a matter of what about 6 months? Okay, nobody cheered that. They weren't pounding the tables on CNBC or Fox Business News about how how come it's back at its highs. Nobody even noticed, hardly acknowledged it. Why not? Great, I'm all for that. Don't acknowledge it. Let's keep it quiet. But there's something going on there. And the action in and of itself is speaking volumes. Another arena that we like, and frankly, it's in a pullback. It's been pulling back for the last year or so. Not collapsing, by the way. It's been eroding down. So it's been in a corrective type decline. That's the Bloomberg Commodity Index.
Mm-hmm.
And right now, frankly, it's at levels that we think is a catcher's mitt area, where somewhere around the 100 level, and it's below 100 right now, we've got a support zone from roughly 96 up to about 102, somewhere in that zone, which we've been in for a few weeks now. We think the Bloomberg's going to dig in and turn back up again, meaning the commodity category is going to reassert itself. And if you look at the historic price level of commodities in general compared to where they were in 2008 or 2011, they're still dirt cheap. You're talking about the Bloomberg under 100. Heck, in 2008, it was 270. In 2011, it was 170. No, excuse me, it was 230 in 2008. It was 170s in 2011. And right now we're trading under 100 and people are screaming about high inflation. Yes, year over year change in the commodity price level was dramatic because prices were so suppressed and depressed between 2015 and 2020 that they were off the page in terms of cheapness. So when they shot up in 2021, well before the war ever happened in Ukraine in 2022, it was a big percent gain, but it wasn't at a high level. And so right now, commodities remain historically cheap, especially cheap when measured against paper assets. So that's another arena, I think, to look at.
Right.
It's the commodity category. So if you want to protect your money, I think it's gold, silver, commodities in general, and commodity-related stocks.
Yeah.
Uh,
And you've
the
been
other,
most, you,
go
you've been
ahead.
most bullish on I think the soft commodities, the foods and the fertilizers, that sort of thing, right?
Yeah, I think, well, we actually back in 2020, before the commodity upturn actually began, which is we put out a report in October 2020 called Commodity Explosion, and it exploded right at that point from about 70 price level to 140 on Bloomberg. Took it about a year or so.
Mm-hmm.
But everything went up at the same time. Okay. But energy led that move. Oil prices and natural gas went up more than did, let's say, soybeans, corn, and wheat. Right now, I think this time around, probably the food components will probably outpace energy
Mm-hmm.
in the next upturn.
Mm-hmm.
And they've had a good pullback. All the grains have had a good pullback.
Yeah.
So, and our focus, therefore, is on trying to time at what price level and when the upturn is beginning.
Mm-hmm.
And I wouldn't just jump in right now. We provide numbers that say, okay, now that's an upturn that's credible, you know. And I think at that point, then you look to shift some of your capital into that arena,
Mm-hmm.
the real world arena, so to speak.
Right. So that makes sense. So I have to ask you before we conclude our discussion today, Michael, about Bitcoin. You wrote something recently, May 25th, Bitcoin to trample gold, question mark. So a lot of the younger people especially seem to be enamored by Bitcoin, and I understand its appeal in the sense that some people want to have the freedom to move their capital around where they want without somebody paying attention or telling them they can't. But you did a thing showing that, well, Bitcoin really hasn't performed anything nearly as well as gold has over the
Well,
last
yeah,
few years.
it was back in, I think, 2021, coming off the high in Bitcoin, which was 70,000 bucks.
Yeah.
In the mid 50s, we turned negative on Bitcoin,
Mm-hmm.
a long-term trend negative. So on net trend basis, negative. But it was also during that time, especially during the 2021 bull market, where Bitcoin went up to 70,000 rapidly. Something that silver could do very easily in a span of a year as well, you know, what Bitcoin did back then. The ads on radio and TV for Bitcoin were claiming the following: Bitcoin beats gold.
Yeah.
And, you know, it was true because we ran the spread chart showing gold and Bitcoin going back to 2017 anyway, when the futures began for Bitcoin. And sure enough, there were big waves up where Bitcoin would beat gold, have a little pullback, go up again. It was an uptrend. But when Bitcoin topped in net trend price, it also topped on a relative performance basis to gold. And at that point, we put out a report, said, okay, it's over. Bitcoin is now an underperformer to gold. Well, since then, Bitcoin went down, to 15,000
Mm-hmm.
from the mid 50s, and gold is back to its highs. So, you know, it was a true statement. And right now, I think that spread is still positive for gold,
Mm-hmm.
still favors gold. One of the problems with Bitcoin is going to be the technological one, meaning its ability to be monitored by governments.
Mm-hmm.
You know,
Yeah.
they can pass laws that say, you know, we want to, you know, yeah, you can have Bitcoin, but, you know, we're going to watch it transactions in your account.
Mm-hmm.
So the regulation, whereas gold to some extent can escape that.
Yeah. And
Because
silver even more, I would argue, in some ways.
yes, I think so.
Yes,
Yeah.
because an industrial metal to a great extent. It's also a monetary metal. Yeah, it's you know, but there's, you know, younger people that haven't looked at history and perhaps aren't really aware of the newest thing to come along is appealing to them. Michael, I'd just like to pass along to our viewers, let them know all the things. I looked at my inbox and there were something like 24 emails that I got with your reports since May 1st. Just to let my viewers know, here's some of the things besides the gold and silver and, you know, the equity markets, the bond markets, and so forth. The Bitcoin versus gold, which you send out a miners shift that really shows the major gold and silver miners and how they're doing relative to each other, and from a technical point of view, which ones are the ones you should get excited about, which ones maybe not right now. Your monthly commodity report, T-bonds update. There was another one on Russia, another very interesting article where you explain how markets work, inhale, exhale. That, I think, was when gold took a tumble below its triple top. By the way, I want to ask you, triple tops, when you, how are you supposed to look at triple tops? If they go up, if we got over 2,000, it seems to have failed now. And a lot of people are saying the bears are getting scared. They're saying, geez, you can't hold 2,000. We must be heading back to the graveyard.
Yeah, well, gold was in a box. And if you're a point and figure person,
Yes.
X's and O's, that technical means of analysis, which doesn't care about time, it just cares about price movement. If you plot a $50 by 3-block reversal gold point and figure chart, go back to the 2000 surge, you hit a high at 2050. Pull back, it was a low at 1700, went back up to 2050 in March of 2022. A lot of zigzags in that box. You went back down to 1700, bounced again. So you have a box between 2050, 1700.
Mm-hmm.
Multiple bottoms, 2 tops. You broke through the bottom of the box and therefore, quote, broke out.
Right.
By printing 1650. So all the price people pulled their hair out, screamed, it's a bear market. You've got a triple bottom breakout. Yes, you did. The problem was gold has never in its history created a double top. Meaning if it did, it exploited it to break through. Any gold peak has been isolated. The 2011 peak, once you made your high at 1919 or 1920, you never got back up to 1900 again. You had multiple rallies to the high 1700s, but you could never get back to top tick. This time, in March of 2022, we went back to top tick, set a double top, went down, blew the bottom of the box, meaning, okay, let's see what's down here. Nothing. Buyers were down there. Next thing you know, tick, 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 back to top tick, 2050. And we've not had down ticks since. You get 3 down ticks to go to 1900. Even if you did, it doesn't negate anything. Our bet is that the reason you're pulling back from that high yet again is to cool yourself off, because gold, after all, had a massive move from 1613 to well over 2050 in a straight shot, basically. It needed to cool off. It was overbought. The best thing for bulls to have gold do now is what it's done. That is spin its wheels, up, down, up, down, up, down. Same with silver, although silver's in a positive zigzag pattern. And cool itself off so that when you do go through and print 2100, which would break out on the point and figure chart, at that point, you're going to have all these price chart technicians say, my goodness, it broke out upside. Boy, were we wrong. And you know what? Our experience is whenever you get a range like that with a breakout one way that fails and goes the other way, the next breakout will be valid.
In the other direction.
Won't fool you twice. Fool me once, but it won't fool you twice. So when you see 2100, if you're not already long, as you should be, the crowd will see 2100 as well. And you'll have a lot of people shutting up. Okay.
Well, we will watch very carefully. All I can say to my viewers is that you've been very helpful to me over the years, Michael. And when your gut tells you need to get out and everybody's scared to death, but your momentum work has been a savior, and it has been so helpful. It's kept me from getting whipsawed in and out of the market so often. I can't tell you. Been very helpful. But again, uranium is another topic. I just want people to know Canadian banks. Banks and munis you commented on, and so there's so much more than what we talk about, and I just want people to recognize that it's olivermsa.com is the place to go to sign up for your letter. Michael, you're so kind. You spend a lot of time with us. You explain your methodology, and you help people. That's the end, and obviously I hope a lot of people subscribe because I think we're at a major tectonic point here where we have these plates bouncing up, rubbing up against each other. One of those are going to subduct, the geological term, subduction. We may be in for a subduction moment of one of those two charts, and I know which market you think is going to subduct. And thank you. Any one last word? Anything else you'd like to conclude with?
No, I think you made the point there. And that is, you've got to look at the broad picture, because it's what the stock market and paper assets related thereto do, especially if they roll over again out of this baloney corrective process they've had since June, redundant upside, downside, upside, downside, upside. It's redundant turf largely. Once that fails and all hope goes out the window, that's when you're going to get the data points that the Fed wants to have it as an excuse to act upon. You're going to get the data points, the negative data points. And at that point, the Fed's going to go printing money. And people think, well, that's going to help the stock market. No, it doesn't. Historically, it's demonstrated it doesn't. Where's that money going to go? It's a river
where there's confidence
going somewhere. Okay.
People are going to be scared at that. The psychology changes, Michael, at that point in time. The psychology changes and people don't want to ever buy stocks again. I've been there a few times in my life. And then at the top, like right now, well, you just got to be in it. There's a fear of missing out. Everybody's trying.
Well, if that hope ever goes out the window, you're right. That's when they won't touch it.
Then where are you going to go? And we saw it to a degree in 2008, 2009. From that point on, we saw gold and gold shares perform marvelously. And if I hear what you're saying, this is going to be at least a magnitude at least as great as that. I think is what you're telling me, right?
Far greater, I think.
Far greater, unfortunately.
And also, I think far faster.
Yeah, far faster.
I'm with the chaos theory, people. I don't think this is going to be an incremental trend. I think this is going to be a chaos theory trend, meaning much of what I'm talking about and you anticipate as well could unfold in 12 months.
Well, I don't like to hear that, but it is what it is, Michael, and want to be as
reality.
Prepare as best we can for the day of reckoning. So thank you very much once again for being with us. Well, folks, don't go away because Michael will be with us again sometime soon, I hope, but David Wolfin will be with me next. He's going to talk about Avino silver and gold, and they're building a mid-tier gold producer, several projects in Mexico. And David has a very interesting story. The stock is selling at around $1 US, trades on the New York Stock Exchange. One I think you owe it to yourself to listen to. We'll be right back. Welcome back, Turning Hard Times to Good Times. I'm your host, Jay Taylor, and I'm really happy to have David Wolfin with me once again. He is the president and CEO of Avino Silver and Gold. It's a company I've been following for quite a few years, actually. The stock trades in New York on the New York Stock Exchange under symbol ASM. It's the same symbol in Canada as well, and recently seeing it trading at around 70 cents in US money, giving a market cap, if my arithmetic is correct, around $83 million. Welcome, David. It's good to have you again.
Good to be back, Jay.
You know, it's your May 23rd news release is what really attracted me, and I thought I'd want to have you on to talk about the progress you're making, because you're extending on the Avino vein on your Avino mining project in Mexico, and you seem to be making a lot of progress. Very good numbers, very good widths too, from what I can tell. Would you just comment on how you're doing there and how's that going, and what does it mean in terms of production for the company?
It means we've extended the life of mine substantially. We announced some drill holes. We're drilling below the developed area of the mine, which is level 17. So we were drilling below that because it's never been done before. And Avino's owned it for 50 years. For 27 years, our partners ran it. They were a private family, and they never did any exploration at depth. So this is very exciting. The average grade is double our cutoff grade, so it's 4 grade material. We're very excited. We hired 2 structural geologists to help us try to figure it out. How deep could it go? Because the total mineralized strike length from the surface is about 800 meters. So it's pretty significant.
Yeah. Are you finding the grades higher than at shallower levels?
Getting richer in copper. And then there's some hot zones in gold, and we're trying to figure that out. Silver is going down, unfortunately, but that's typical with these type of deposits, I guess, is what we're told.
Well, there was some talk, I know the last time you and I spoke, about your geologists believing that there may be a porphyry mothership down lower, and
Well,
that your copper grades are getting higher. Well, let me ask you, David, are your silver equivalent grades getting higher, even though the mix?
oh yes,
They are.
absolutely. I mean, yeah, I mean, we're following a model of a porphyry style, but we haven't proven that yet. And as of yesterday, one of the structural guys saying it could be a scar. So yeah, Pan American has La Colorada, which is a scar, and so I wouldn't mind if it was something like that as well. So, but yeah, our silver equivalent total for the whole property, including our recent acquisition, La Preciosa, is 368 million ounces of silver equivalent, and 60% of that is pure silver.
Okay, so it's still predominantly silver with some other goodies, and of course. So, are you continuing to drill below these levels now, or?
Yeah. We're doing some infill drilling. Obviously, these are outside of the new resource estimate we put out earlier in the year, so it'll increase those values. But yeah, we've got drill turning, and we're still learning what we can. We're gonna have a fluid inclusion study updated. The last one was done a couple decades ago, so we need to get this information to that expert to update his model, which will help us identify other targets potentially to the east or the west. Because on the surface, it's 1.6 kilometers of strike length, and it narrows as it comes down. But there's areas to the east and the west that could host other feeder zones.
Interesting. So what can you talk a little bit about your production? What are your costs, your let's say cash cost or operating costs per ounce, and then your all-in and sustaining costs now, David?
Yeah, cash costs is between $10 and $12, and all-in sustaining is between 18 and 20. Per quarter, it fluctuates because it depends on mine sequencing and the grade.
Sure.
For last year, our all-in sustaining cost for the year was below 18, and we expect it to be similar for this calendar year.
Well, one of the things I know longer term, looking at your plans, you're planning to really ramp up production, especially about 4 years from now. It's gradually growing, and you acquired another mining project in Mexico, La Preciosa.
La Preciosa from Coeur Mining last year we acquired.
Yeah, and so where does that stand now, and how soon might you get some production from that?
We're just doing community engagement right now to get their blessing. We own the mineral rights. You need this surface accessibility, so we're just working on that. We've ordered equipment in anticipation of finalizing getting their blessing, and permitting as a satellite deposit, so we don't expect any issues there. And hoping to break ground this year. There is some broken ore on surface, 50,000 tons of broken ore on surface. Once we have an agreement in place, then we can truck that over to our mill. We have some spare capacity in our mill, so we'll hopefully see some production from La Preciosa this year. But the main development will happen later on this year, and then we'll hopefully be bringing fresh ore out of the mine sometime next year.
And how far is it? So, as I understand it, then you're going to be hauling ore over to your Avino mill.
It's about 18 kilometers from the proposed portal to our mill, and it's paved the whole way.
Oh, okay. So it's pretty much a straight line. Then it's not sort of as a bird would fly.
Hang on, it's a straight line. Is 18 kilometers. The road isn't exactly straight at this time. So there might be a few extra kilometers to go around a town.
Yeah. And of course, that will add to cost. So you have any idea what sort of grade you're looking at over there?
Oh yeah, over 200 grams of silver equivalent is the resource grade. But the Gloria vein, which we're going to mine on for the first several years, is higher than that. So more like 300 grams silver equivalent. And there are hot zones within there that run into the kilograms. But, you know, I can't tell you what year and what month we're going to be mining those particular tons. But we're excited to get in there because it's going to make a big difference. The Avino mine itself is a bulk tonnage, lower grade deposit, and La Preciosa is higher grade. So it's going to be a good mix.
Higher grade, narrower veins, or what's the?
Yep. But we're looking at mechanized mining, long hole mining. There could be some narrow areas where we have to stope it, but we have the experience. We've done that with San Gonzalo in the past, so our guys know what to do there.
So you have a resource there now at La Preciosa?
Oh yeah, it's one of the largest undeveloped silver resources on the planet. When Coeur had it, was 265 million ounces of silver equivalent, but they had a low cutoff grade because they were considering a giant open pit, which didn't fly, obviously, because you're in a populated area, and they needed higher metal price to justify the large investment. Like their capex was about $350 million, so it didn't make sense. And I approached Coeur several years ago and told them that we shouldn't compete for resources. If Newmont and Barrick can have operational synergies in Nevada, we should be considering the same. And we're proven operator in this area with infrastructure and low cost, and they should put it in the rightful owner's hands, which they did. And so we're going to mine it from through underground methods, which means there'll be less dilution. So the mineable ounces will be less, but they'll be higher grade because there'll be less dilution. We'll be going in and dissecting the veins, not taking out a huge open pit with a lot of waste rock in between the veins.
Yeah. So you see a lot of exploration potential over there as well, I guess.
Oh, absolutely. Absolutely. There's plenty of potential. They just focused on just the main area, the Gloria, Abundancia, and Martha. 1,500 drill holes have been put into them by Orco, Pan American, and Coeur. And I asked one of the geologists from the Orco, and he said probably about $80 to $90 million has been spent de-risking La Preciosa. And so we got it for about 35 million in upfront consideration. Total cost is more, but it's based on royalties and that sort of thing that will be spread out over time.
Very interesting. Well, do you, I guess, your longer term projections are for something upwards to 8 million ounces, I believe.
Yeah, that's our target. Our target over 5 years. And so another contributor, so you got Avino, La Preciosa, and then you have the Oxide Tailings Project. So we're currently embarked on a pre-feasibility study for reprocessing our current tailings. There's about 5.7 million tons, just under 100 grams silver equivalent, or 17 million ounces. So we're looking at reprocessing that using either heap leaching or dynamic leaching with tanks, large tanks, which will shrink the footprint and improve leachability. It'll be faster, and recoveries will be higher. So we just have an engineering firm working on the pre-feasibility study right now.
And the metallurgy, has that been settled, or is that ongoing?
Yeah. We've released that information, and we've achieved recovery rates up to 90%.
90%. And the mix is that predominantly, well, that's silver almost, or are there other metals there as well?
No, there's gold and there's copper. The whole tailings is fairly large, over 10 million tons. So when we went underground mining, that sulfide material is on top of the oxide material that was mined in the 70s and 80s. So it's just figuring out the sequencing is what they're doing in the pre-feasibility study right now. And so that will be ready in Q4. So that's big news for us this year. So people should be looking for that in the fourth quarter.
Okay. And also, I believe I saw something in your corporate presentation, your website, in terms of the economies of scale that should prevail with your three sources of revenues, or three sources of production, right? Your average cost, your costs are projected to come down fairly dramatically on a per ounce.
Absolutely,
basis,
between $10 and $12 all in sustaining once we have all three assets producing at the same time.
Well, we certainly can dream of the day when we get some wind at our backs, David, with silver. I'm sure that's I'm sure that's something you'd like to see.
Sure.
And
definitely. I think that's going to happen with the green movement.
Yeah.
The demand for metals is just going to go up. Right now, we're in a little bit of a lull here, but I don't think this is going to last very long. I think the demand is going to rise dramatically over the next, 5 to 10 years, and you're going to see metal prices go much higher because supply is not going to be able to keep up with the coming demand.
Well, certainly, not only silver but copper, of course.
Yeah,
silver and copper.
We have it.
Yeah. And maybe you have a lot of it. That's what's I would say that's what has really gotten me excited about it. First of all, you've ramped up exploration, which is something I really am happy to see over the last couple of years, David. And now with your new acquisition and the possibility of a porphyry, a copper porphyry, maybe copper and some other metals with it as you get deeper. But yes, it's very exciting. I'm really glad. So I'd say in terms of share price drivers, potential, I guess if you could sum it up maybe, and what people should be on the lookout for.
Well, more drilling results coming out, us hopefully being able to define a model, but I know it's very difficult. When I worked in Nevada many years ago, I was touring Barrick's pipeline mine, and we're standing over the giant open pit, and they're saying they changed their mind 7 times on what it is and how it came there. I says, when will you know? They go, once it's finished being mined. So you have to keep an open mind because it can evolve. So we're bringing in outside experts to help us try to figure it out.
Excellent.
Because now we control a lot of the district and trying to understand the plumbing system that brought up these veins all around on our property, because we have dozens of veins on our property. Some are really narrow, but they're all part of this system.
Same system, right?
Yeah, and there could be other Avinos on there. We don't know.
Well, so often these porphyries are the mothership, as Dr. Quentin Henning likes to call them, the mothership deeper down that is the driver for these other minerals. And then as you get to higher levels, the different metals you'll find. So you're very fascinating, David. I'm really happy for you. It looks like Avino may be on. I mean, you're looking, I guess, to become sort of a mid-tier producer, I guess. If you
That's the goal. That's the goal. And we have a plan, 5-year plan. So it's transformational for us, and it's a clear path. We know how to do it. I mean, it's not M&A. It's just getting these 3 assets up and running at the same time. And
you'll be able to ongoing exploration from cash flow, hopefully, if things are working out.
And La Preciosa will not be expensive to because we're not building a new mill or anything like that. We're just going to put it in a portal, and the vein comes right to surface. So we'll be being able to pull ore pretty quick
and pretty inexpensively.
And we have at our mill, we have a 20-kilometer dedicated power line capable of 5 megawatts, and we're only utilizing 3. So we have excess capacity there. Should we consider an expansion in the mill in the coming years? We recently commissioned a new dry stack tailing storage facility, so we're recycling the water. So we have plenty of water. There's plenty of people in the local communities that want jobs. So we've got all the ingredients there to grow the company.
Well, excellent. And of course, you're now, I must say, even though you're a lot younger than I, you're a pretty experienced miner now. You learned
thank
when
you
you were
very
a
much.
kid with your father, who I knew. And
I worked in the mine in the 80s as a teenager.
yeah, well, you're a miner for sure, and really thankful to see the progress you're making here, David. And wish you all the best. And we want to keep up with what you're doing and let our viewers know going forward. So thank you very much for joining me again.
Thank you very much. It's been a pleasure.
You bet. All right. Well, folks, that's it for this week. Next week, Cherry Leeden of Gold Bull Resources will join me along with John Woods. He's credited with one of the founders, I think, of the Sleeper Mine in Nevada, a very rich mine that I was actually involved in being a part of a gold financing going way back in the 1980s. David was a kid in the 1980s. I wasn't so young then. Anyway, Cherry and John Woods will join me, and John Rubino. Until next week, goodbye and God's blessings to you.
All financial advice provided on this show is for entertainment and educational purposes only. The financial ideas and strategies discussed are only provided as a starting point for a conversation about money matters. With regard to your particular investments and financial strategies, consult your financial planner, CPA, or investment professional. All your financial decisions are yours and yours alone to make, and subsequently are solely your responsibility. The information that is supplied through the context of the radio program and any repurposing of its content by the host or network is a combination and collection of solid financial investment understanding, opinion, and comments. This network, show, and its host are not liable for financial strategies, outcomes that you employ in any manner that result in any kind of loss. Shares of corporate sponsors may be the subject of buy or sell recommendations in Jay Taylor's newsletter in accordance with Jay's objective opinion.